Good morning, ladies and gentlemen. My name is Greg Mikulowski from ForexLive.com. This is a Kickstart video. Today's date is Monday, March 11, 2024, where I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar. So let's get started. Before we get started, I want to bring your attention to this box right here. And you see these ranges right here. These are the high to low trading ranges for the major currency pairs. 15 pips for the euro versus US dollar, 21 pips for the Aussie, 16 pips for the New Zealand. The biggest range is the dollar versus yen at 64 pips, but all the other ranges are well below the 22-day averages that have occurred that 22 days is about a month's worth of trading. 30% of what is average, 47% of average, 53% of average. So you get the idea that we haven't had much movement in the major currency pairs and trading here today. With that said, let's take a look at the euro versus US dollar, and we see the price action last week. We did move higher in trading last week, but Friday's jobs report sort of led to first a move to the downside, the dollar getting stronger, and then a rotation back to the upside that took the price above the 61.8% retracement of the move down from this high right here to this low right here. That level came in at 1.0969, but the price rotated back to the downside, and we closed, more or less near the lows for the day. And then trading here today, the market price action has been up and down. This swing area right through here between 1.0924 up to 1.0932 is the next key target on the downside that we are holding support against that level. The level is defined by a number of different swing lows and highs through here. We traded above and below the levels right here before starting to reestablish support against the level through here before breaking to the downside and moving lower, and then coming back up one last time before moving to the downside here. It wasn't until last week that the price did extend above that level. And again, this was a move after the U.S. jobs report sent the price down to test the 50% midpoint of that same move down from this high to this low. Found quickly reversed back to the upside and then rotated back down. So this level between 1.0924 and 1.0932 is going to be a level that is going to be a barometer for traders this week. Stay above it is more bullish, move below it, and then get below the 50% retracement, and we could see further downside momentum to the downside on the disappointment of the break to the upside. Stay above it, and the 61.8% retracement continues to be a target on the top side for the euro versus US dollar. Let's take a look at the dollar versus yen next. And if we take a look at that on the 4-hour chart, big, huge move to the downside last week off of the idea that the Bank of Japan was going to shift their policy more toward a tightening or more restrictive policy, get off the yield curve controls, get out of negative interest rates, and that sent the pair sharply to the downside. In the process, we fell below this level right through here where we had different lows coming in play here and here. Started to trade a little bit above and below before breaking below it and also the 200 bar moving average at the same time. On the 4-hour chart, we consolidated around the 100 bar moving average here before breaking to the downside, and in trading on Friday, the price reached a new low going back to this period right through here at the end of January, and then consolidated into the close and trading here today. We are staying below this swing area through here where we had swing highs or swing lows through here, then fell below it a little bit here, but then reestablished a support here. So there was a pretty decent support here before we fell below the level and used the level as resistance here before once again breaking to the upside. So it wasn't until last week the price came through to and through that level and closed within that area on Friday. And trading here today, the high price today stalled at the 147.098 and found willing sellers against that level. So the sellers remain in control below that level. We're also trading above and below the 38.2% retracement of the move up from this low right here to the high price that we saw right up here, and the 38 getting below the 38.2% retracement is one of those things that I like to see to prove that the sellers are being business, and we are currently just below that level, 146.80. If we get below this lower swing area, that opens the door for a move down toward the 200-day moving average. That's this green line right here. I haven't traded below that green line since going back to this period right here early in January, first week of the year. So that would be a big move to get below that level 146.18 to increase the bearish bias. Finally, let's take a look at the sterling versus US dollar. Again, on the 4-hour chart. And in trading last week, we moved above the swing area that have been outlined for a number of weeks now, between the 125.94 and 128 level. On the top side, we also had the high price for 2023, I guess, if I can get this right, 2023, which came in at the 128.27 level, and you can see in trade here today, the price has been able to stay above that 128.27 level. That's a short-term support target. What I wouldn't like to see from a technical perspective, and I think would disappoint traders, if the price were to move back below this yellow area right through here, that would disappoint the buyers who played the break to the upside outside of this box, and so getting below the 1.2788 level would trigger that negative bias. So watching this area right through this level right through here at 128.27, and then we'll watch the low of this swing area up through here at 127.88. Again, move below those levels and things shift back to the downside on the disappointment. So there you have it. A look at the three major currency pairs to kickstart your trading for this trading week. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.